What's up traders, welcome to Failure to Displace, and in this video we're going to take a look back at this week's price action where we potentially had around 13 hours available to us in profitable trades based on our OTE trading strategy. We are in the middle of August, so the majority of the trading world is on vacation, so markets are very slow, a little bit difficult to trade. Hopefully reviews like this are going to help everybody. We can all look back, we can see what opportunities were there and justify the OTE strategy that we're currently working on. Let's jump into the charts and see what we were offered. Here we are on Monday taking a look at price action. I have already done a market review for Monday, which I'll leave a link to that up in this top corner here if you want to watch it. But a quick rundown, essentially on Monday we were looking for the optimal trade from Friday's massive pump. The optimal trade, which is just in the middle of this 5-minute fair value gap. So that's where I was looking for an entry, and then I took the entry for a long position on Monday based on a 1-minute time frame. So we can see here what happened as we approached the optimal trade entry and 50% of the 5-minute fair value gap. Price broke down, created a low. We had a break of structure here with a body close and another break of structure here with a body close. We didn't get a fair value gap left until this point here, so this is our 3-candle fair value gap. Entry as price tapped the fair value gap and then pulled away, aiming to take price up to another 5-minute fair value gap. Close out here for a really nice 3R trade. So that was the trade on Monday. There was a reversal at this 5-minute fair value gap. We had one false start which took us as a loss because we had a break of structure here, leaving a large fair value gap. Price ran straight through that, but then we did have again a break of structure here with an entry onto a breaker block. Our breaker block is this candle here. So price pumped up, it created a new high just above, aggressive move out of this range that it had created, with an aggressive move back into the range, left a balanced price range, drived through this breaker block, leaving a fair value gap and a breaker block together. So this is your 3-candle fair value gap pattern. This is the breaker block, so this initially would have expected to be an order block to support price. Price crashed straight through this and then retested it as resistance. So it becomes a breaker block into a fair value gap for an entry to run lower down. So 2 possible entries there on Monday. Here we are coming into Tuesday's price action. So we can see after the trades that we had in London on Monday, price consolidated in New York, so there wasn't much volatility. Asia then broke lower. We had a pullback in London and did take out Asia high and the New York PM session high, creating relative equal highs here between Monday's New York AM session and our London session. We did have a legitimate optimal trade entry set up, however we never got triggered in. So we can see here we took these highs, we broke structure leaving displacement, so this was a valid optimal trade entry. Price broke lower, we had a very small pullback but it didn't come to optimal trade entry and essentially just continued to crash down until New York. We had then a very low volatility New York session, but there was a valid setup, but it only yielded a 2R profit. So this is where we need to be looking at how volatile the markets are and whether holding out for 3R, as I initially mentioned in the strategy video that I released, is worthwhile, or whether we need to be more aggressive on our take profits and just protect our wins a little bit better. We've come down, we took London low, we had a break of structure with a candle body close at this point here. We left a very tiny fair value gap. This is our 3-candle fair value gap pattern. Between this high and this low, there is a very small fair value gap. So that validates the optimal trade entry. So we can pull our fib from the extreme swing low to the high, which was this candle. We then got a pullback, tapped the optimal trade entry perfectly with this candle, price rocketed away. What you can see is reasons to why you would be looking to secure potentially 2R is we obviously were very, very bearish from London. So price had really jumped. So this is kind of catching a knife, is this trade. We had a fair value gap on the 5-minute time frame, along with an order block here. So this is just something that you would need to be aware of when price is pulling back and how price has reacted to it. And what you can see is if you're looking, again, your 3-candle pattern for the fair value gap is these 3 candles. 50% of this fair value gap was respected perfectly at this point. So that big rejection bearish candle there would be a big warning sign that potentially this is going to hold. So that's where you could be looking to close out at your 2R. We did get a second chance for the 2R on this bullish candle, and then price ultimately came down to take us out. So potential of 2R there, you wouldn't have got the 3R. It fell short by 5 or 6 pips. So yeah, there was no 3R there, but potentially 2R. Keeping your eye on the fact that we do have an order block, we do have a fair value gap there, so there is potential resistance, and we were already very, very bearish in the day. So the strategy and the reactions at the optimal trade entry worked lovely. I don't think anybody can question those. The issue is trade management at the moment, refining and getting the best out of it, and how we can understand when to be taking profits sooner or when to be letting things try and run for 3R, or how you manage the trade. So nice 2R there on Tuesday in the New York session. So now let's take a look at Wednesday's price action. So you can see we put in the low on the AM session on Tuesday, and then price has started reversing now. We are making higher highs. Every session is getting higher. Coming into London, we've displaced above the Asia high. So this is one of those situations where you're better off looking for a continuation trade as opposed to looking for the reversals. What's giving this away, again, is let the candles tell the story for you. There's much more displacement in Asia for the bullish side. So we're leaving bullish fair value gaps, relatively small bearish candles, and then coming into the open of our London trading window at 1 AM, massive displacement taking us above the Asia high. Yes, there is a break of structure with fair value gap here. So potentially you could have got caught out taking the optimal trade entry at this point. What I would point out, however, is that you should be aware of the way we have come out of the Asia range. We've not broken back into the range. So there's no failure to displace above this Asia high, pulling back into the range. We are displacing out of the high, which means that we should be looking for bullish price action in this situation for a continuation trade going higher. Given the fact as well that there's a high likelihood that the low of the week is put in on Tuesdays, we could be expecting a reversal on Wednesdays, day 3 of the week, looking to go and take the weekly high out now. So the weekly low is put in on Tuesday. We are now aiming to take out Monday's high, go for the high of the week. Coming into Wednesday's London session, I would actually be bullish, looking for higher prices, given the fact that the candles are showing us bullish displacement. In this situation, as we've broken through the high, I would be monitoring for an optimal trade entry to take us long, specifically looking at the daily high from the Asia low, which we never get tagged in. We don't come back to optimal trade entry as we're coming at, but also we could be monitoring the session high, which would be from here up potentially. We don't quite get tapped at this point, look. So if price displaces, we could be looking for the high for optimal trade. It never gets tagged in at these levels. It does get tagged in here as we come back. Now again, this is something where you need to be wary. Would you be looking for a long coming into half an hour before New York opens? I know I wouldn't, because New York in the middle of the range will generally run the high or the low of London. So we could be looking for a continuation. We never get tagged in. Price starts pulling back. We get to optimal trade entry literally half an hour before New York opens. So I wouldn't be looking to take a long position until New York has decided what it's going to do. So I'm going to remove this. We've pulled a fib now from the daily low to the daily high. It's not that fib. So yeah, we're pulling it from the daily low, which is this Asia low, up until the current London high. See how price reacts. So we sweep London low, pull away, breaking structure on the 5 minute. So this is where we can now start looking for the continuation. Again, strong displacement. We break structure with candle body closes here. So price has pulled down. It's hit optimal trade entry of the day. So this is the 618 of the current daily range. It's reacted after taking London low. Broken structure. Candle body close on this candle, leaving a fair value gap. We've got an order block. We've got a fair value gap. We've got a breaker block on the 5 minute. So this is the last bullish candle. Normally you would have expected that to offer some resistance. Price has driven straight through it. So we've got confluences building up here now. Fair value gap, order block, breaker block, optimal trade entry. So you take your long from the optimal trade entry. Again, expecting higher prices. This is another situation, as I mentioned, from New York yesterday. Because we're in a consolidation market, not a breakout market, volume isn't there, so we don't have the volatility that we usually expect. We hit a 2R, so a comfortable 2R more or less instantly. However, we get nowhere near threatening a 3R. So again, trade management in these kind of market conditions is key. Are you taking profits at 2R? Are you moving stop losses to break even? Not sure how you're playing it. We do hit a comfortable 2R, however. Now here we are looking at Thursday's price action. We have red news on Thursday. Which I believe was August the 10th. August the 10th. We had core CPI in the New York AM session. So got to be very, very cautious. The first thing I'd just like to point out is if you were brave enough to hold out overnight, then you would have hit your 3R on the New York trade from Wednesday. As I said, I would be closing out much earlier than that. Worst case, I would have been closing out at the close of the New York PM session for a break-even trade, essentially. But we should be looking maybe at taking profits a little bit sooner. There's no option to get into a trade in London. Essentially, price just explodes, taking out the weekly high through London. Driving higher before the news release into New York. We take the high, there's no reversals offered. So I can't see any point at anywhere in this price action where I would be looking to get short, because there's no reversal given into the London session. And likewise, there's no pullback anywhere near any optimal trade entry for a long position. We know that news is dropping at 8:30, which is here. So we take out the high, we have some kind of whipsawing price action. There's nothing tradable in this, in my opinion. The range that was created on the news drop was a massive range. We never broke out of that range all the way through the New York AM session. So no trade on Thursday. And here we are looking last trading day of the week, which is Friday, the 11th of August. We had news on the pound at 2 AM. So red folding news, which is essentially these candles here. So this price action here, for me, is a no-go zone. We pumped up, we created a high. However, I wouldn't be looking to trade anything here because this is all created as part of the red news drop. The high did break the Asia session. So we took the liquidity from Asia section. There was a break of structure with a very, very small candle body close here. That wouldn't be enough to validate any kind of short position for me, especially given that this was all news driven. So I wouldn't be looking for that. price did come up and take this high. So at this point, there would be a valid setup for me. But we have a similar situation as what we had before, in that the break of structure was here with a candle body close. So we've broken structure, we've left fair value gaps, so this does justify our optimal trade entry. What worries me at this point, and why I wouldn't be looking to take this, is that we have more news due. PPI at 8:30 in the New York session. When we retrace back into optimal trade entry, we're into 6:30 already. So this is whipsaw price action. We've pulled liquidity from here. We've taken the Asia low already, and we've taken New York PM session low as well, creating relative equal lows at this point, I suppose. This to me would be worrying price action to get involved in, especially knowing that we've got PPI. Was it PPI? Yeah, PPI coming at 8:30. We can see what happens is you may have taken a trigger here and taken a loss at this point. Price comes, just sweeps the high of London, then proceeds to break lower, and then obviously the news drops and the price just melts. No entry, because as well as the PPI at 10 o'clock, you had consumer sentiment as well. So 2 red news folders. So by 10 o'clock, which is along here, you're not going to be taking any trades at this point because we've got the second red news folder drop. So only trades available to us are earlier on in the week. Thursday and Friday are both off limits in my opinion. There we go, guys. I hope you found that useful. We can see that there was a potential for 13R, maybe 14R, depending on how you traded this week. And due to the lack of volatility in the markets this week, we can potentially see that trade management is probably more important than we initially imagined when coming up with the basics for this strategy. If you did enjoy the video, please leave a thumbs up. If you have any questions or comments, leave them down in the comments section below, and I'll be happy to try and help you out where I can. And if you're enjoying the content, please consider subscribing for more content like this one. Thanks for watching, and I'll see you again in the next one.